The world's greatest geologist is on the verge of his next billion-dollar discovery. With looming shortages in copper, zinc, gold, and silver, this may be the best opportunity hard asset investors have ever faced. Learn more at futuremoneytrends.com/hardassets.
Well, hello everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri, and I'm here doing a follow-up interview with David Trungale of TraderTours.com. And our last interview got a little more attention than normal, and he talked about something that is a little controversial and I think difficult for a lot of people to swallow, and that is silver and it going into a bearish trend. And we've seen that. And over the last week, over the last month since our last interview, the trade has been down. So I want to start off by giving credit where credit is due. David, first of all, thanks for coming on today, and congratulations on your call. You've been right, and you are one of the few that has been right on this trade.
Well, thanks for having me on again, Kenneth.
Yeah, no, and I just wanted to kind of ask you what happened over the last month. Why are we seeing silver go down the way it has? Is it just mainly selling? Does it have to do with fundamental reasons regarding interest rates and Janet Yellen coming out talking about possibly raising them? And is the technicals indicating all of this? Is it relating to the fundamentals? And I don't know, I just wanted to see what your thoughts were with silver and what happened over the last month.
Definitely. So to address your original question, as far as, this being a selling game, the answer is yes. And a lot of people aren't going to like what I'm about to say, but this is the truth. Markets move based on buying and selling, and that's really about it. And when you boil it down to that, it sounds very rudimentary. It sounds, too simple, but that is the truth. Markets are a buying and selling game. Now, of course, there's all these variables out there that could potentially influence people to buy or sell something, whether it's positive earnings, whether it's news on the Fed, that could potentially trigger people to do different actions, whether it's to buy or sell. But what I look at is what's actually happening. Are they buying or are they selling? Because that's what matters. And what I've come to learn is you're never going to be able to predict what people are going to do with their money until they are actually doing it. And to me, what I see here with silver, and it's been the same pattern for years now, it's just a downtrend that has support that has been broken many times. We just recently broke some more support at around that $15 level, and it's looking pretty bearish from here. So I think silver, the bear market's not over. We're in for another drop coming up. But, me being a technician, I really don't listen to the news at all. And this is, again, totally contrary to what most people do, and a lot of people are still going to have a difficult time accepting that. But again, this is something I've been doing for years now, and it's not just me. I've tried to reference some other historical traders out there like Jesse Livermore or Nicholas Darvis. These are people that, again, they trade on nothing but market action. They're just looking at different patterns and going with that. Darvis intentionally isolated himself. He cut off all social communications. If you read his book, you'll get a kick out of that. He was up in his hotel room screening trades, and he didn't want to hear anything from his broker or from Wall Street. And some of the biggest profits he made was when he was overseas, in Paris. So it's pretty ironic when you compare that to what most people are doing.
Yeah, no, that's great. And as far as it getting bloodier from here on out, I'm not a technician. I'm not someone who can, who looks at the charts too much. I listen to guys like you to hear what you guys are saying. But for me, at least, because of what is going on, it really feels like the bottom could get taken out from silver based on it dropping and a panic setting into the market. Looking at the charts, how low do you see silver potentially going? I know that's a tough call to make, but based on support and resistance, what could we be seeing with silver going lower?
Well, I think the catalyst to this drop here, there was a huge volume spike when that initial support was broken. And I can't remember the exact day. I think it was about a week ago, if that. And there was reports on, JP Morgan and the banks, of course, shorting a just ridiculous amount of silver. But again, I don't really care about any of that. I just care about what the big money's doing. And you can call it a manipulated market. That may be true, but That's the critical factor here is if it is manipulated, then don't buy it. You're going to lose. You will lose betting against the big money. And that's really what trend trading is when you condense it down to the core. It's following what the big money's doing. So I agree with you. It looks like it is going quite a bit lower. Support was taken out. I can't call exactly how low it's going to go. I've said 12 before. And when I was on Daniel's show, I talked about how the possibility of it going below 12, I think, is it's becoming more and more probable, obviously, as it gets closer to 12. If it did eventually go below that, single digits, is that far-fetched? I don't think so. If it went down to 9 or something, I would be the last person in the world to be surprised. So we'll have to see. It's just a waiting game from here. But if you are considering shorting it, I don't think this is the worst time to get in because, again, it was about, I'm counting the months here, about a 7-month correction, and then bam, right through that line of support there again.
Yeah, and you know what? The truth is you have a lot of credibility because it's not just silver you talked about. If anyone wants to go back and listen to our last interview, I encourage you to do so. But you also talked about Disney. And Disney, I think when we last talked, was around $110. And right now I'm looking at it, and it's $119. And that was something that you were talking about being technically bullish. You were looking at the charts, and this was something that you saw getting stronger. And it gives you a lot of credibility for the type of work you do. And like I said, I wanted to point that out. And I don't know, do you have any updates for us on Disney?
It's looking really good. I'm still holding. I'm still adding my positions as it continues to rise. But these trends go far beyond the short term, and that's where I wanted to talk about this. And it gets a little bit tricky because everyone has a different definition of the short term and the long term. To me, I consider the short term today, tomorrow, the next month or two. I consider the longer term, on a year to year, over the next 5 years. So to me, silver's been in a longer term bear market now. It's 5 years, and Disney's been in a very long term uptrend. If you just go back and look at the 10-year chart on Disney, that's a long term uptrend. But if you look at the 1 year, as we just talked about, that's a long term uptrend too. And recently it's had a nice pop up starting in June, and here we are at about 119. But when I'm looking for a trend, I like to measure it on more than one level. So I like to look at the shorter term picture, in the course of days and weeks, and then I kind of zoom out from there. I look at the longer term perspective. So another nice factor to consider when looking at Disney is another big volume spike back in, it's right at the end of January, early February. There was a huge volume pickup and then a nice gap up on the chart. Anytime you see a breakaway gap like that, that's can often lead to a nice buy signal. But it's looking good, man. It's going to keep going up, I think. And then you have silver with the long-term downtrend, and I think it's going to continue to go down. A lot of people don't, like I said, want to hear that, but you have to learn to adapt to what the market is doing. You don't ever want to be permanently bearish or permanently bullish on anything, and that's an important lesson to learn. You don't want to stick with one side of the trade. You have to take the market for what it is and learn to adapt to the trends accordingly.
Well, the truth stands on its own, and you can't argue with that. Regardless of what will likely happen in the future, you can't argue with what has happened since we last talked and today. So I want to get into talking about trading versus long-term investing, buying and holding. And the problem, I think, that most people face with trading is that they lose money, and they're excited about it. They're attracted to the idea of making income, starting off with, let's say, $20,000 and making 10% a month on that money. And I think what happens a lot of times is that $20,000 ends up to be $10,000, and they don't progress forward, and they get frustrated, and then they go towards the buy and hold and a more safe strategy. So let's talk about that a little bit. What are your thoughts?
Yeah, so again, a lot of people might have a different definition than I do when it comes to buy and hold, but believe it or not, I do consider myself a buy and hold guy. I mean, I've been holding my short position in silver for 3-4 years. I've been holding my long position in Disney for about 2 or 3 years, and I think that is a long time period. Whether other people will dispute that, that's their prerogative, but You know, I've said this before, the downside risk is where you have to, you want to mitigate your risk with every trade. So if you go into Disney at 119, all you have to do to simply avoid something catastrophic is, have an exit plan. You could set a stop in, let's say at, around 100. Okay, that way you're never going to lose 50% or something ridiculous. If you're more of a ultra short-term trader, you could set in a very tight stop. But I think that's the key to trading is to, look out for those catastrophic events that could really hurt you, and that can be very easily avoided if you set in a stop. So whenever you enter a trade, you want to have some sort of an exit plan. Now, on the flip side, obviously, there's no limit to how high Disney can go. I think it's going quite a bit higher as we progress here through the rest of this year and go into next year. That's the beauty of my strategy here. And it's very simple. Like I said, I'm looking at Disney right now. If you were going to buy it, okay, you set a stop loss. So the most you could lose then is, let's say, 10, 15 points. Perhaps you could set it quite a bit tighter, maybe set it at 110. It all depends, again, on your time frame. But on the upside, there's no limit to what you can make. You can make 50% or more. It all depends on how high Disney can go. So I like to view this as the odds being in my favor. The analogy that I'm going to give here may sound a little bit corny, but imagine you're playing roulette in the casino. And as the wheel's spinning, you don't like the outcome, you can pull your chips off the table. Let's say you bet $100. Suppose you can pull off, $98. Now you only lose $2. So, you're giving back a percentage of what you entered for. So I don't consider this gambling at all. It's proven to be, trends have proven to be effective over the course of many years. One other reference I'd like to make, Richard Dennis, that's a name that some have heard of, others not so much, but he turned about $5,000 into $200 million back in the 80s. Very successful guy, big-time futures and commodity trader. And a very interesting story, he actually had a dispute with one of his partners. And his partner told him, Richard, you have a very special gift for this, and trading can't be taught to your average guy. And he said, well, I disagree. And it turned into such an argument that Richard actually made a bet. And he said, all right, I'm going to go out and host a class and teach other people to trade based on some very simple trend following principles. And so they made a bet. I don't know what exactly the wager was, but Richard started running ads, and he got a group of students together. He taught them some very basic rules, and of course the students had the open-mindedness to listen. And when the whole thing was said and done, I think he actually put up his own money for them to trade with. That's how confident he was. And I think they turned a profit of around $100 million over the next few years. And, I kind of closed out the skeptics. And, what's interesting, too, about that is I believe that little stunt there actually helped inspire the movie Trading Places with Dan Aykroyd and Eddie Murphy, for those that have seen that movie. That's a pretty good one. But, very interesting story. But, again, trend trading has been around for a while. Just few people can interpret it properly. And, like I said, a lot of people aren't willing to give it a chance. And that's part of the problem.
Well, that's really good. Well, hey, David, is there anything else that you had on your mind that you wanted to add today before we close out this interview?
Just to make a closing statement here, I'm someone that I always like to be upfront. I try and avoid the jargon as much as I can. Like I said, trading is not as complicated as most think when you boil it down to the basics. Now, don't confuse, again, just because it may be basic, don't confuse that with easy to execute. There's risks involved, as we talked about before. There's a psychological aspect. So don't confuse simple with easy, but just understand that I know that other people can learn to trade. I've taught many people to do it. And a lot of people follow me trade either for a full-time living or for a very nice stream of secondary income. So just the only thing that I would ask is if you're going to try out the route of trend trading, go in there with an open mind and then let the results speak for itself. That's what you have to go off of. If you're in a position where you wake up and you look at your portfolio in the morning and there's those ugly red numbers in there, it's time to try something different and go off of results. That's really what matters.
Well, that's great advice. And everyone, that's David Trungale. Check him out at tradertours.com. David, thanks so much for taking the time with me.
It's a pleasure. Thank you for having me on again, Kenneth.
Absolutely.